Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the markets will resume trade after a day's holiday, and the Nifty for this week so far, we've actually seen been trading in a range which has been narrowing in the last three sessions. But at the same time, the index has managed to gain for third straight session in a row and also post newer record highs on an intraday basis as well. So on Tuesday, it made a new record high of 24,661 before we went for a holiday as well. And with this high, the Nifty is now up nearly 3,500 points in just 29 sessions since June 4th. That was the day of the Lok Sabha election results when the index had declined by almost 6% Of course, it's the earnings reactions that will be continued to be seen on the street. Stocks like Asian Paints, Just Dial, LTI Mindtree, Elcon Engineering, among others, will see a reaction to their earnings. And of course, they will continue to remain a key driver. Today, of course, all eyes will be on Infosys, Havells, L&T Technology Services, Mastech, Persistent Systems, Polycap, Tata Technologies. All of these companies will be reporting their Q1 numbers today. Again, today will also be the weekly options expiry. Details will be shared with you by Shail. And of course, global cues which are weak, that as a handover that we have got, especially the US markets that faced a rout in the tech stocks. We are going to be seeing how the markets react to that. Good morning to all our viewers and good morning, Shail.
Ladies and gentlemen, a very warm welcome to you on this wonderful Thursday morning. We are on 18th of July. The most important event, the national budget, is just 3 sessions away, which is tomorrow, Friday and Monday are the 2 trading sessions left. You have one today and of course Tuesday itself will be trading. So 23rd July, please tighten your seat belts and let's look at the market from that point of view. We are fresh from a holiday which was yesterday, and the market is raring to go. We are consolidating at record levels. You'll see the Nifty right there in front of you, and today as well as tomorrow and the weekend are very, very important days for the Nifty, simply because Infosys post markets close today, RIL tomorrow, and HDFC Bank day after tomorrow will be reporting their numbers as far as the first quarter is concerned. All these stocks are in fine shape except for HDFC Bank. Just look at the kind of rally that you've seen on Infosys, 9.5% higher as far as the expiry for the month of July is concerned. HDFC Bank is actually down 4.7%, and of course RIL is up 2.7%. This is how the stocks have progressed between when the July expiry started and today. So keep these 3 shares in mind. Out of the top 4 index heavyweights, which is HDFC Bank, Reliance, ICICI Bank and Infosys, 3 will be reporting numbers over the next 3 days. Sakshi's already mentioned the list of 6 FNO stocks, and of course we'll keep a very keen eye on Asian Paints. But let's just focus on the Nifty for a bit. You'll have the Nifty's chart right there in front of you. As I have pointed out and as Sakshi has said, it's a very strong rally that we are sitting on. If you look at the last 4 sessions, we've added about 300 points on the Nifty. Needless to say, this is a record high, up 1.1%. And if you look at the 590 points that have been added so far since this July expiry began, the Nifty of course is one of the top performing indices globally. The run up is ahead of the national budget. Now what? If you look at the options data, you see a very, very strong support at 24,400. If you look at how positioning it is, about the overall interest at 24,400 is at about 61.32 lakh contracts, and at 22,500, at 24,500 it's 71.45 lakh contracts. These are very, very strong support levels, and if you get a move of the Nifty towards 24,500, 24,550 on an intraday basis, which is actually happening, then that is an entry point for you as far as an intraday level. Where will you exit? You'll exit at 24,700, because that's a very, very strong resistance as far as Nifty bears are concerned, almost 70 lakh contracts are outstanding. Sakshi will give you the details on FI numbers. Over the last 3 days, they've been buyers to a very nice number, and of course DIIs, they are booking partial profit, so one needs to be a little careful as far as the intraday movement is concerned. How about sectors that will move? Of course, PSU banks. The run-up has already started over the last 2 trading sessions, Monday and Tuesday. Focus on mid-cap, small ticket, high beta items, and of course the entire space of railway, defense, fertilizers and agri stock will have a strong run up over the next 2 or 3 sessions. But keep an eye out on the door. There is a chance of a decent bout of profit booking because of the pain that you are seeing in US markets. But even there, let's get Sakshi's view in as far as what Wall Street did over the last 2 days, because remember, yesterday was a holiday, so we'll be reacting to 2 days of Wall Street, and then I'll show you 2 very, very important graphs which make perfect sense at this point of time. Sakshi, what's happening on Wall Street?
Well, Shail, on Wednesday night, the US markets did end on a mixed note, with the S&P 500 and the Nasdaq taking a sharp hit, dragged by a sell-off in the technology stocks that was amidst the fears of a trade war with China. So the S&P 500 shed about 1.4%, but meanwhile Nasdaq tumbled over 2.8%. In fact, Nasdaq registered its worst day since 2022 as chip stocks shed over $500 billion in value on the China trade fears as well. However, we did see that the Dow Jones managed to gain about 0.6% in the overnight trading session. The US 10-year bond yield eased to 4.1%. Among commodities, gold futures quoted at around $24.63 a level, as well as Brent crude oil futures. They continued to languish near $85 a barrel mark as well. Following the Wall Street action, equity markets in Asia were steeply in the red this morning. Japan's Nikkei plunged over 2%. Kospi and Taiwan, they were down 1% each as well. We did see that the Hang Seng managed to pull up about 0.05% in trade, but even the Shanghai was down by 0.5%. The FII flow has continued for the third straight session as well. FIIs were net buyers of 1271 odd crore rupees on July 16th, and the domestic institutional investors, on the other hand, they net sold shares worth about 529 odd crore rupees in trade. So that's as far as the Wall Street and the flows are concerned. The GIFT Nifty is actually indicating a muted start for the Indian markets in today's trade. A whole host of stocks is what we will continue to keep an eye out on, especially on the earnings front. So Asian Paints will be the first one that we'll be watching out for. Here the company has reported weak set of numbers. Net profit down by about 24.5%. The revenue declined by about 2.3% as well. EBITDA down 20.2%. And margin has also slipped to 18.9%. That's a 420 bips downtick from 23.1% earlier that the company had reported last year, same quarter. Now, LTI Mindtree, that's going to be in focus. IT services company has reported a 1.5% year-on-year decline in the net profit, and in the corresponding quarter, the profit had been 1152 odd crore rupees. This time around, the company has reported 1134 odd crore rupees as well. Now, when we look at L&T Finance, here is some bright spot from the L&T group. The company has reported all-time high net profit of 685 odd crores for the first quarter, up 29% year-on-year. Revenue has increased by 17.4% as well. Z Entertainment will be in focus. The company has said it will raise $239 million or 1997 crores via the foreign currency convertible bonds, or the FCCBs, which will have a tenor of 10 years with a coupon rate of 5%. Glenmark Pharma, there's good news. Again, it's received a final approval for US FDA for its drugs, capsules, which are used for the treatment of epilepsy. Adani Green will be in focus. The company has reported its Q1 business update with an operational capacity increasing by 31% year-on-year to 10,934 odd megawatts from 8316 megawatts earlier. Aditya Birla Money in their Q1 results has posted a net profit that's jumped 73.4%. Strong results right there to 16.4 crores versus 9.4 crores. The net interest income for them has also increased by 47.8% to 88.5 odd crore rupees. So we look at that too. Just Dial has also posted remarkable set of numbers this time around. The net profit has spiked almost 70% to 141 crores, and also the revenue has grown by 13.6%. EBITDA has surged 119.8% to over 80.6 odd crore rupees. The margins have expanded to 28.7%. KEC International is going to be in focus. The RPG Group company has secured orders worth 1100 crores for transmission and distribution of projects in India, Middle East, Australia and Americas. GMR Airports Infra, that's going to be in focus. The passenger traffic in June this year has grown by 8% year on year, with the domestic traffic up by 6.4% and international up by 12.8% as well. Nazara Tech will be in focus. The two arms of Nazara Technologies have got a GST demand notice worth over 1100 crore rupees. So those are some of the stocks that we'll continue to keep an eye out on Shell today.
Right, ladies and gentlemen, and with that, let's just look at two graphs, which is the US 10-year yield as also the US 2000 index, which is the small cap variety, which the US markets are showing a very strong rally. First, it's the Trump trade that's doing fantastically well in the markets, and you can see it in the decreasing US 10-year yield. The number that you see on the yield is 4.1559, and on 25th of April the same number was 4.734. It's a very, very sharp fall. It basically means that Mr. Trump will ensure that US interest rates will go down substantially. In any case, the US Federal Reserve has said that you will see rates go down, if not in the immediate future, then at least in September. This is what the market is betting on. And I'll also like you to see the US Russell 2000 index. This is the equivalent of the small cap index that we have in the market. Remember, it's the small cap manufacturing companies that are the worst hit in the US as far as these sky high interest rates are concerned. Now with this cut which is in the pipeline, this proposed cut or this cut that is expected, you see a very, very sharp rally happening in the US 2000 index. This is the only major index which is not at a record high, as is the Dow Jones index, the S&P 500 and the Nasdaq index. The sell-off on the Nasdaq index yesterday was because of an interview that Mr. Trump gave to a business magazine, and he said that the US should charge Taiwan a fee to defend the island nation against overseas aggression. And it's the chip stocks which are in the US Nasdaq index which are a part of a major industrial business which have fallen, and they have little or no impact on Indian stocks. So keep this in mind when you look at how Indian IT stocks trade. Any dip towards their strong moving supports should be an opportunity to buy. Remember, Infosys is the top performing stock as far as the Nifty is concerned all of last week, up 9.5%, and then they report their numbers. This is what the background is as far as Wall Street is concerned. Sakshi, any brokerage reports that you have?
Yes, absolutely, Shell. Elara has initiated its coverage on Polycab with a 24% upside. They have given a target of 80 to 90. So that's one report. Motilal Oswal Financial Services has initiated its coverage on Zentech with a buy rating and a target of 1775, a 31% upside from the current levels. It believes the company is well positioned and the company is going to be growing faster than the industry with strong margins. Also, it is fully backward integrated, strong competitive edge, and also has an asset light model as well. They also see a 56% profit after tax CAGR from FY24 to FY27 as well. Nomura has initiated coverage on Aadhar Housing Finance. They have a buy rating and a target price of 550 rupees. They believe that it's least expensive within the sector, distinctively positioned with the most diversified book, and also this is poised to move up higher from the current levels. Jefferies has initiated its coverage on the gold financiers. It has a buy rating on Muthoot and both Manappuram Finance, but they prefer Muthoot. They believe the target for Muthoot is kept at 2220, and for Manappuram they have a target price of 270 rupees. Again on iShirt we have a CLSA report. They believe Royal Enfield has launched the Guerrilla 450, which is priced between 239,000 rupees to about 254,000 rupees, which actually means that they have a competitive edge right here. Of course, Royal Enfield has has been losing market share in the segment as competitors continue to scale up, but they still believe that it has expensive valuations, and therefore they continue to believe an underperform rating on this one with an unchanged target price of 41.57. On Asian Paints post the earnings, CLSA has a report which they believe that they have lowered the FY25 to 27 CLEPS by about 3%, and the target price they have slashed from 23.37 to 22.90 now. They've retained the underperform rating as they believe heightened competitive activity will keep the sales and the margins in check, even though price transmission will depend on the competitive activity, and which is evident from the actions from the others as well. Also, we have a report from Macquarie on the extension of the EV policy in UP, which is now extended to 2027. They prefer M&M and Tata Motors and TVS in the two-wheeler space as well. They believe the consumer incentives in the state are near-term positives for the EV demand, and the state accounts for 10% of the four-wheeler demand in India as well. So those are some of the reports I'm keeping an eye out on, Shail.
Ladies and gentlemen, let's welcome Mr. Devin Choksi, MD at DR Choksi FinServ, and a very well-known market expert. Over the last 36 years, Devin Bhai has been tracking industry cycles, stocks, IPOs, you name it, and he's done it. Devin Bhai, good morning. What a warm welcome the market is giving you. 24,600 on the Nifty, no signs of pausing, and whatever stocks you've suggested to your clients, they're laughing all the way to the bank. Now, please tell us, is there a Trump trade that is happening in the US in terms of a weak dollar, therefore strong gold, in terms of a weak US 10-year yield, therefore a dip in interest rates, and the sectoral rotation that seems to be happening out of NASDAQ into small cap stocks? How is this likely to impact Indian markets? And what is your medium-term view on Mr. Trump vis-a-vis India?
Good morning, Shail, and thank you for having me on the show. Well, I think a couple of things are important. One important aspect is a de-dollarization of global trade, which is now becoming a reality. Most of the countries which have now got ready with their own digital currency are likely to play on the front foot with, I think, the exchange of currency against, I think, their trade, which is likely to remain, I think, a very strong factor, which is going to resist the dollar, I think, to a greater extent. And how exactly dollar will pan out, I think, is remain to be seen. I don't think that immediately, I think, the volumes, etc., will get changed. But the fact remains that I think even if this particular move has started, it will only percolate and it will further grow in the entire environment, wherein all your global trades are going to get settled against the local currency. India are going to take, I think, the leadership role in this particular aspect, very clearly seen. About 60 to 70 countries already have their digital currencies, and I think India has started settling their rupee trade under de-dollarization move. I think with at least around 30 to 33 countries. So to a greater extent, I think the move has already happened. It remains to be seen how exactly America is going to play their calls in this kind of an environment. But more importantly, I think the interest rate coming down is a very important sign. Couple of things will happen. One, interest rate coming down, I think yield factor, I think also will play a role. And to a greater extent, I think the money which has up till now been held up from spending, I think will start getting into the spend. Discretionary spending for industry, including in IT, is absolute reality. So Indian IT companies should be favorably positioned going forward in subsequent quarters. On the other side, I think if we also have a similar situation wherein our currency remains relatively stronger compared to dollar, in such situation, I think we will have a headroom to bring down the rate of interest and probably in turn control the inflation in the country. So we would look forward positively to the RBI's moves in the area of, I think, how systematically they would like to bring down the rate of interest in subsequent quarters in the financial year. So all in all put together, I guess I think the developments happening in America are actually, I think, very positive in my viewpoint, with the rightist government coming into the power and probably, I think, taking care of America's interest. That is also, I think, going to help country like India, which is majorly supplying, I think, to America in different forms, including the intellectual talent that we are talking about. So we remain, I think, relatively more positive as far as India market is concerned. Maybe the correction in the price in the valuation cannot be ruled out in the given situation. At least we are concerned because we are reasonably at a premium, trading at a premium. So that is one aspect I think which one will have to I think be mindful about. But otherwise, I think most of the issues remain absolutely convincing and positive for India corporate per se and India economy at the same time.
Okay, very good morning to you, Devin sir. I also wanted to understand from you how have you assessed the earnings that have come in so far? We've got some heavyweight earnings from IT space, autos, now paints also, Asian Paints has come out. So some large cap companies are coming out with their earnings. What have you made of the earnings and has it met your expectations? Is it indicative of a good quarter that is underway?
Yeah, good morning, Sakshi. Well, I think Bajaj Auto, TCS, they are the ones I think who have basically, I think, not disappointed. On the contrary, I think they are showing the signs of further growth. TCS's commentary also suggests that in the subsequent quarters, I think they are expecting the larger order inflow, and at the same time, I think the better regime. Good part is that the wage bill is now going to increase in the single digit for them, and good part is that they are adapting AI to a very systematic level. So I guess I think the important element to this particular move would be that Indian IT companies, which have up till now been suffering because of variety of reasons, and along with I think the rate of interest coming down, I believe that I think the Indian IT companies are likely to be beneficiaries because the discretionary spending in America will increase. So the niche players in the mid-tier space are relatively more promising and important to me, though L&T Mindtree has come out with a result which is a muted result. But I believe that I think some of the important companies in 1 or 2 quarters would start showing relatively better results. And that would include the LTTS, Science Technology, or for that matter, even Tata LXC kind of companies where they are playing in a niche area. So they could possibly be relatively better off. The frontliners like Infosys and TCS could possibly show steady to better performance henceforth. But I think the upside in the stock price could be around 15% or so from the bottom levels. So that is where I think one could position the trade. Auto in particular, company like Bajaj Auto, Tata Motors, they are making difference with the approach, I think the strategy that they've adopted. Bajaj Auto is systematically adopting a strategy of creating a new market for themselves, like how they created for Pulsar, they are now creating for Freedom 125 and beyond that. So from that perspective, I believe that I think companies like Bajaj Auto and companies like Tata Motor, which is largely driving under these principles of I think demerging themselves from different businesses and trying to create better growth prospects for them. So yes, I think selectively some of these companies will remain good. Asian Paint, certainly I think the result is little disappointing, but not very surprising though, because I think the competition has already started playing the role. And frankly, I think the discounting has started coming up on the shops. So I think so from that perspective, there is an element of little concern from as far as investment is concerned, because there is a price correction in offering because of the premium valuation at which the companies are quoted. So this is, I think, a broad summarization of I think select companies result as I see it at this point of time.
I think there has been a major disappointment in how the margin has shaped up as far as Asian Paints is concerned. You've seen a 450 percentage point drop as far as BPS drop that you've seen in margin, and that's mainly because of the elections that were there, the heat of this time's summer wave, and of course maybe possibly wrong product choices as product mixes as far as Asian Paints is concerned. So you're going to see that reflected fairly sharply on prices today, as also the entry of Birla Opus into this select duopoly kind of a market. Devin bhai, tons of wealth has been created in railway stocks and defense counters. We are 3 days away from the major event which was supposed to be driving this sentiment on these two specific PSU sets of stocks. Despite elevated valuations and despite this very sharp run up that you've seen in all sorts of PSU railway and defense stocks, please name two stocks, one in defense and one in railways which you would want to probably add on declines? You could name more as well.
Yeah, Shail, I think there is element of I think risk I think involved today in form of execution risk because I think most of the positive news and the narratives are already built into the price today. Valuations in defense related companies or the railway related companies, they have already reached to a level at which I think it should have been at in FY26. So you can well argue that I think you are basically running ahead by 2 years as far as the valuations are concerned. Currently, market is not going to let down on valuations and the value also because of the fact that I think significantly large amount of liquidity is building the narrative. In my viewpoint, I think that's an area where one needs to be concerned about. Yes, I think one would like to have the wish list to buy in the portfolio at some point of time when the correction takes place in the market. I think the likes of IRCTC, for that matter, I think it remains reasonably promising company from the multiple angles, also because of the fact that I think the larger amount of services that they are building into. Though I would say that I think at current price, I think I would actually expect I think some amount of correction before which I get into the buying mode. If market does not give one, then I think one will have to wait till the time I think that opportunity comes along. On the other side, I think defense, we like one company which is Solar Industries. We have been holding in our portfolio. We believe that I think given the kind of rollout prospects of different products which they have been having approval from the defense ministry, particularly I think in the area of the warheads, I think which they have been creating. Uh, in my viewpoint, I think that's where probably this company could be showing a distinctly sustained to higher amount of performance going forward. But again, the value-wise, I think the stock is appreciated 3 times, 4 times in the last 1 year. So certainly, if there is a correction in the price, then I think one can possibly re-enter it. The disclaimer out here is that I think all these companies which I'm talking about, I think we are holding in the portfolio. Yet I think we are putting a word of caution at this point of time.
Right. Okay, ladies and gentlemen, the pre-open rates are upon us. A 200-point dip on the Nifty. Just this will correct towards the better side. First and foremost, let's look at Asian Paints. This is the top loser on the Nifty, down 5.8% at 2,800 rupees. Remember, it's the earnings reaction. And before this drop, Asian Paints over the last 1 year is down 12%. At a time the FMCG index has actually gained 14. So you can well see how the swing is working against Asian Paints. Let's take a dip into what's happening in the NSE 500 space before we get into the Nifty, which is stabilize a little later. Bajaj Auto, ladies and gentlemen, 2.6% higher, 99.70, heading towards the 5-digit mark. NTPC 1.9% higher, 388. Coal India 1.5% higher, 520. You have a decent move coming into State Bank of India at 882, one of those rare index heavyweight stocks amongst the top 10 which are in the green. Let's look at the IT space. I am keen on Infosys. Okay, this is not looking good. 36 rupees lower, 1690. This is the earnings boy. Earnings will come post market hours. TCS 63 rupees lower, 41.15. This is not looking good for the IT space as well. Let's look at the FNO space and find out how movement is amongst the most active counters. Strong show by L&T Finance. Remember, the company had come up with a very good set of numbers, 3% higher, 190. Muthoot Finance and Manappuram Finance have to be watched because of higher and record high gold prices. These are the two leading gold financing companies in our space. Both of them record highs, Muthoot and Manappuram. And I believe there is a report on Muthoot by Jeffries. Well, Sakshi will again point out. Earnings per persistent 1.8% higher, 49.10 earnings are today. And you have a host of sideways moves coming into Escorts, Kubota 4074, 1.2% higher. We'll wait for these prices to settle. For the moment, it's a 1 percentage point downtick on the Nifty, 24,370. Devan bhai, any quick view that you have on the energy space? ONGC is the top player, 20% higher in July's expiry alone.
At this point of time, I think the volume is also increasing for company like ONGC, and that is a good sign. After a significantly large lull of I think many past quarters, this company has now started seeing the higher amount of production of oil, higher amount of production of gas, and that is what I think is being suggesting that I think the downfall in the volume has been arrested. On the other side, I think the price regime remains I think steady to firm for the exploration companies and the companies which are in the business of the exploration of oil and gas. For them, I think it's probably relatively a stable time to better time. And last but not the least, all other fundamentals remain equal. I think today the market has started developing the appetite to buy those companies which have not yet moved up significantly, where the opportunity and the potential is higher. So that's where probably I think the allocation of money is also getting into. So I think money is driving most of the narratives child today in the markets. And that's where I believe that I think one will have to be a little bit more uh, systematic in approaching the subject because market is a trading range. Market is a trading bound market actually. I think the range of trading is I think significantly expanding with the sectorial rotation taking place. So I think selectively one can look at individual companies. Fundamentals are not bad, but the fact is that this is not a new fundamental. I think it is existing. Today the narrative is changed because of the liquidity in the market.
Even sir, let's discuss the budget with you. We're just 3 sessions away, sir. Which are the key sectors that you believe are likely to be the biggest beneficiaries of the upcoming budget? And beyond the budget, what will it take for the markets to sustain the momentum? If at all the budget, comes in as per the expectations, is it already priced in? Or are there going to be further levers that can pull the markets higher from the current level, sir?
So direct beneficiary may be few, but I think indirect beneficiaries from the budgetary announcements are likely to be many. Now, for example, I think you look at I think infrastructure. Already 11 lakh crore worth of allocation has happened in the interim budget. Now they are likely to increase it to 12 lakh crore, suppose if they have the project to spend money, which I believe they have. So power generation, distribution of power, they are going to be the beneficiary of this particular move when they increase the spending on the infrastructure. And when the power generation and distribution increases, the indirect beneficiary would be the capital goods companies, the companies which are supplying and ancillary companies to the capital goods companies, they would be the beneficiaries. That is where probably I think you may probably like to argue that why not look at some of the pump manufacturing company, why not look at some of the some of the engineering companies which are basically I think into right space. Because on one side I think the hydrogen power thrust is going to increase. So I think certainly the ancillaries like pump manufacturers will also come into play. Similarly, I think the renewable segment, I think the larger thrust is going to happen on the wind energy as well as on solar energy along with hydrogen. So certainly, I guess I think there is going to be an ancillary play which is going to be rolled out. To me, I think one will have to look at individual companies very systematically and then possibly make a choice. Currently, we are already invested in many, but at the same time, we believe that I think there should be opportunity in ancillary space in this particular area. Second is the manufacturing. In the manufacturing, of course, I think various Make in India initiatives have already been rolled out, and the government is likely to systematically allocate, I think, further sum of money towards PLI schemes as well. I guess I think that's where probably select companies in the sectors will probably be beneficial. And the last one is agriculture. Agriculture, of course, I think a lot many things I think would be on a already spelled out. And I think today the by constructing the warehouses or storages, or maybe I think providing the agri services to the farmers, including the insurance services, all of those issues could possibly drive some of the sectors within the listed marketplace. So one will have to selectively look at I think individual companies. I would one must say that not with the budget immediately, I think that we would act upon, but we believe that I think there is a fair bit of opportunity going forward that one will get once I think the clarity is coming out from the allocation of money in budget.
Fair point. The pre-open has settled. It's a modest 70-point downtick, and we will happily live with that on the Nifty. Remember, it's the weekly expiry today, so the index itself is likely to be muted. We'll also see the Nifty IT index opening 131 points lower at about 39,000. Remember, the big boy Infosys has its earnings today. HDFC Bank has settled 0.7% lower, Infosys 0.5% lower, Reliance flat. What's in the green? Lever 0.5% higher, 2700 on Hindustan Unilever, and of course Tata Motors 1.8% higher, now consolidating well above 1023. It's not a start that one looks forward to, but today are a lot of considerations as far as the weekly expiry is concerned. Remember, last 4 sessions have been in the green, so you just might see some profit booking. Asian Paints, the stock in focus 2875, 3.5% lower. This is a muted response to the kind of carnage that you've seen on first quarter earnings. Remember, this is a price that you last saw on June 4th. So keep that in eye. As far as the top gainers on NSE 500 are concerned, earnings boy Just Dial, phenomenal set of numbers, increase in margin 6% higher, 1100. KEC International order win 1100 crore rupees, 5% higher, 930. And of course L&T Finance, it's the earnings boy. What else is in the green which might attract our attention? I think it's the gold financiers, Muthoot and Manappuram. Devin bhai, very high gold prices, cross 74,000 rupees a tola. What do you think is looking good in the gold financing space? Are these NBFCs worthwhile at current levels, or is it overstretched?
So, Shail, I think given the kind of tendency that these NBFCs, particularly in gold financing NBFCs, have in collecting their receivables, I guess I think we are not very comfortable putting larger amount of exposure into this space. We rather play with the NBFCs where probably I think they are retail focused and multi products. The likes of Bajaj Finance, likes of Poonawalla Finance. That is where I think we find I think ourselves more comfortable compared to your pure focus NBFCs which is supporting to the gold. And if we must, I think then probably housing finance is another better choice that I believe. Because in housing finance, we see a clear roadmap for next 5 to 15 years as far as I think the new houses coming up. And as a result of it, the lending book is likely to expand 20% on a CAGR basis. So I think one would play safe with housing finance companies. And in general, I think the companies which are starting the retail financing consumer finance. That is where probably I think we remain relatively more sure about as against having to focus gold finance companies.
Right. Devin sir, the of course viewers, you should keep a note of the Jeffries report that has come in. It is initiated coverage on both Muthoot Finance and also Manappuram Finance. The targets have been given 2220 for Muthoot and 270 for Manappuram as well. So that's the kind of report that we have come in, and we'll continue to watch out for how these stocks continue to react forward from here. Of course, Muthoot is now trading at 1862, 1.5% higher. We'll continue to look at that as well. Devin sir, the entire cement basket is something that I wanted to discuss with you. There was, just recently a lot of mergers, acquisitions that were taking place, consolidation happening, price hikes in the offing as well. Of course, you're talking about how the budget will focus on infra, and these building materials are going to be again in focus in case there is a higher outlay and the focus increases here. How should one approach the cement space? Is it safer to go with the large cap names like an Ultratech Cement, like we have been doing for so far, but just because of the price ticket, is it better to see mid cap names because of increased M&A activity from henceforth?
So on one side, I think the demand related prospects remaining equal for almost all players.
Okay.
What would be the differentiator in the cement space? I think that is what I think one should be looking at. We find there are three important points I think which basically makes the differentiation. One important point is the capacity and the pan India presence. Ultratech and Adani group of companies, they are now perfectly fitting into this particular bracket where they have the larger capacities and at the same time, I think they have got the pan India presence. So it is extremely important because I think in order to beat any respective pocket related issues, I think it is important that I think you play with a pan India presence player, and I think this is where these two companies are relatively more strong at. Second important aspect, I think, which we look at in this moment is, I think, how exactly these companies are building their supply chain logistics management. I believe that, I think, Adani Group has got a natural advantage of having the East-West corridor coming along with them, connectivity on East-West corridor along with them because of the port facility that they have created. And since, I think, the government also is trusting more on the transshipments, I believe that, I think, the inland transportation for cement is only going to gain momentum hereafter than what we have seen. So I think, again, this particular point, I think, goes in favor of Adani Group, particularly because I think they have got the supply chain logistics in the East-West corridor. It is already built. And third and most important point, I think you should have the limestone reserves, I think, which is fundamentally very important because the limestone reserves definitely, I think, is the key to the higher amount of throughput or the output, as you want to call it as. I think, given the kind of demand scenario that we are seeing. Otherwise, I think the energy component remains as a key component, wherein the renewable is now taking the leadership in the consumption of energy for cement, and that's where again I think the Adani is playing more powerful. So yes, I think we would remain selective, but at the same time, I think we would be mindful about these three, four checking points. I think before investing into any particular company at that point of time.
Right, ladies and gentlemen, the opening rates are upon us. 53 points lower on the Nifty on its weekly expiry day is something that we will happily take after a 4-day 300-point uptick on the index in the past week. Nifty Bank 144 lower. IT index is 200 points higher, and this is what I was wanting to point out, ladies and gentlemen. You may have seen the Nasdaq dip because the dip was because of chip stocks. It wasn't because of the wider set that is there, and therefore you have a positive outcome. Infosys 1% higher on its earnings day, which will be reported post market, 1740. TCS 0.7% higher, 4208. Axis in the green, Reliance marginally in the green. Remember, Reliance reports tomorrow, 3156 for you. What's in pain? HDFC Bank 1% lower, earnings will be out on Saturday, 1603. Bajaj Finance 43 rupees lower, and you have ICICI Bank flat, Kotak flat. Let's look at Asian Paints. This is the earnings boy, 3.6% lower, 2869. This is a muted response. Elecon International 8% lower, 1187. This is also the earnings boy. What else is moving strongly in terms of gains? You need to look at stocks like Just Dial, 11% higher, very strong set of numbers coming in, 1152, a very strong margin expansion also seen. KEC International 4% higher, 924. We'll also focus on IDBI Bank 3.9% higher, 91 rupees. There are media reports that a report has been submitted to the Reserve Bank of India and the Finance Ministry on its potential of divestment. We'll keep an eye out on that. A strong move coming in into Mannapuram and Muthoot, 2% higher. What else is moving? The Nifty is inching up, just 34 points lower now as far as prices are concerned. So this is a good move. We'll get into FNO and look at the top gainers. Okay. You have L&T Mindtree 2% higher, 57.20. You have L&T Finance 1.5% higher, 187.12. Indus Stars going strong at 2% uptick. Any all-time highs? Muthoot Finance, Marico, and India Cement going strong all the way. This is how the markets have opened, ladies and gentlemen. Nothing much to be worried about on Nifty's weekly expiry day. Overall, we tracked 19 indices for you. 17 of them are in the red. It's the FMCG and the Nifty Realty Index which are in the green. Sakshi, what are you watching?
Well, IDBI Bank, there is some news that's pouring it that the RBI may have submitted a report with respect to the disinvestment from the government, and there is a plan of about 60.7% stake that could be sold, and that's why the stock is in focus. Those are just reports coming in from wires. We will just have to verify all of those reports as well for our viewers, but as it is indicative that this could be the reason why the banking stock is higher in trade. Well, we'll thank you, Devin sir, on that note for being with us on this very special edition. But we'll also welcome Rajesh Ji now with us. Rajesh Palvia, Head of Technical and Derivatives Research at Axis Securities, is now joining in. Rajesh, how would you really look at the markets today? Would you stick with IT space? Is that the safer zone? Or are you looking at some other spaces that could be coming in favor today?
Good morning, Sakshi. Good morning, Shalji. Good morning, everyone. So, IT and FMCG, these two spaces are giving us confidence that here we can see some continuation of our rally. FMCG space is also buzzing, and lot many stocks are showing good buying interest since last couple of days. So I think from FMCG pack, one needs to focus at this moment. Britannia, Pidilite, Tata Consumer, all these stocks are showing a good strength. So I think here one can look for some opportunity to deploy some long side of trade. And in mid cap IT, I think some of the stocks like LTI Mindtree, that stock is also looking promising. The way stock is moving in up a higher top, higher bottom formation, I think LTI Mindtree can continue further more upside. Possible target we can see towards 5,800. At this moment, your stop loss should be placed at around 56.30 to buy LTI Mindtree. Even from a large cap IT space, I think one can focus on Infosys also. That stock may also continue furthermore upside as the stock has formed a rounding bottom formation. And looking at the near term, short term structure, we believe that till stock is holding above 1,700, there is a high possibility that we can see another round of rally in Infosys towards 1770, 1780 zone. So that these two stocks are looking promising from IT pack at this moment.
9:20, ladies and gentlemen. Namaste, Rajesh ji, and a very warm welcome to you, sir. 3 days left to the national budget. What looks good on your charts according to you? Where do you think lies momentum on the long side?
I think for Shelji, a lot many sectors towards the budget may showing good traction in terms of buying. I think fertilizer is one space where one can focus, where we can see some up move towards the budget. Another theme that railway stocks are also shown some profit taking from their recent high, but I think most of the stocks are holding the ground at higher level and still holding above their breakout levels. So I think railway would be the another theme where one can focus ahead of budget. And third one that we are focusing is tire space. That space is also looking promising. So I think one can look for tire space also for for budget point of view. I think Apollo Tire would be our first choice to buy at this moment, and we believe that Apollo Tire can continue furthermore upside. 580 to 590 would be the target for Apollo Tire on the higher side in the short term, and your stop loss should be placed at around 535. From railway theme, I think one can look for IRFC. That stock is also looking promising. Your stop loss should be placed at around 200, and on the higher side, we are projecting target towards 230 to 240 in a short period of time. And from fertilizer space, I think one can focus on Chambal fertilizer. That stock is looking attractive. Uh, though stock is almost trading near to its 20-day moving average area, so I think 588, 488 should be your stop loss to buy Chambal fertilizer also, and upside target we can see towards 530 to 540.
Okay, we'll focus on Just Dial, ladies and gentlemen. It's a blowout that's happening, accompanied by a very, very sharp surge in volume as well. 1174 for you, needless to say. This is a double digit gain. This is the top gainer as far as the NSE 500 is concerned, and you see the counter gaining 13% on 6 lakh shares. While this is boosted by earnings, but this is something that should be looked at on the charts as well. Rajesh ji, what are Just Dial's stocks telling you?
So, Selji, very strong buying action. after the opening, and the way stock managed to give breakout on a weekly chart of its falling trend line, that clearly showing that now this stock may move further higher to cross its previous swing high, which was formed in July 2021. I think now if it's hold above 1130 mark, there is a high possibility there will continuation of this up move, and possible target towards 1250 we can see in just dial. At this moment, we would advise to hold on the position with trailing stop loss of 1130. 1250 would be the next target.
It's IT and to some extent PSU banks that are still buzzing in that overall broad-based kind of a weaker setup that we have today. LTI Mindtree 3% higher, ONGC. You also have Apollo Hospitals that's picking up from the healthcare pack. Axis Bank, State Bank of India, Infosys, TCS, Sun Pharma. Those are some of the stocks, and of course some FMCG counters like Tata Consumer Products also doing well. Telecom names like Bharti Airtel, after the subscriber addition numbers have come in, also are ticking higher in trade. Within the F&O space, India Cements, again LTI Mindtree, Muthoot Finance, Manappuram Finance, Indus Towers also is a buzz with action. Let's discuss with you the entire telecom space, Rajesh ji. Where would you really keep your focus? Bharti Airtel is up. How would you look at also Indus Towers that's been rallying? MTNL was a mover in the last week too. So the entire space is a buzz with action, and now few newer subscriber additions pulling up the stocks higher.
So definitely Bharti Airtel would be our preferred choice from the telecom space, as long-term structure is bullish, and the near-term also stock is moving in upsloping channel on a weekly chart, that clearly showing that there is a sustained buying action is taken place in this stock. We believe that here in Bharti Airtel, the next target or a positional perspective we can see towards 1550. So I think those who are already long can hold the position, even if in the volatile market, if you get any opportunity in decline also, you can buy and accumulate the Bharti Airtel. Your stop loss should be placed at around 1410. That would be the important level on the downside. So buy and accumulate would be the strategy. 1550 is the positional target for Bharti Airtel. Indus Tower is also looking promising. The way stock managed to be breakout of its surrounding bottom formation on a weekly as well as on the monthly chart, we believe that here also we can see a continuation of up move possible upside in Indus Tower. We can see towards 440 to 450. So at this juncture, we would advise to hold long position. Even in the decline also, you can add the position. At this juncture, one should place their stop loss around 398 to hold the long position. 440, 450 would be the next target for Indus Tower.
Okay, got that. Two more stocks I want you to focus on and tell us how are you really looking at these stocks, Rajesh ji. One is Zomato. Again, there is a dip, another day of a dip that's coming in. I think it's trading now at around 215 odd levels. So yeah, about 1% lower. And Irida is another one that I wanted you to focus on. There is another day of a dip of about 4 odd percent coming in on this one too. How would you look at these two stocks?
So Zomato is in uptrend. Yes, some profit taking at higher level is happening in the stock, but still, if we analyze on the longer term perspective, I think till stock is holding about 205, there is no as such worry in terms of trend. I think trend is likely to remain on the bullish side. So I think one should use this decline as a buying opportunity. 205 should be your stop loss to buy these dips, and on the higher side, once the stock crosses about 230 mark, then these really can extend to 260 level also. So those who wants to buy for positional perspective, they can deploy some long trade in this decline for Zomato, and buy on dip should be your strategy. Irida, very strong momentum we have already witnessed in last couple of days for Irida, and stock has moved up sharply from 200 level to 280 to 90 kind of zone. So I think some profit taking is happening in the stock, but I think still the trend is on the bullish side. One should deploy long side of trade if you get opportunity around 250 kind of zone. That's the attractive level again in this decline. Your stop loss to hold long position would be placed at around 238. Until stock is holding about 238, I think trend may remain on the long side. And once stock crosses about 265 270 zone, Here again, we can see a resumption of rally and then possible target on the higher side. We can see towards 310 to 320 also.
Right, ladies and gentlemen, 9:28. The first 13 minutes of trade have lapsed, and it's not looking good for the bears. Nifty almost at its day's low, although nothing to be worried about as far as the weekly expiry is concerned. That's the action that we are seeing, down about 70 points. Absolutely no pain there, but it's the PSU pack which is going through a bout of very, very heavy profit booking, whether it's railway stocks, whether it is IREDA, whether it is PSU stocks in the defense space. All of them are now bleeding profit. IREDA 5.5% higher, 256. You have Hindustan Aeronautics 4.5% higher at 5104. Cochin Shipyard 3.5% lower, 2646. Selling on National Aluminium, Hudco 2% lower. I'm just giving you the flavor of where profit booking is happening. BHEL 1.9% lower, 313. Remember, these were the stocks that were in very, very strong trade. But what's really moving is ONGC, and this is something that Rajesh ji should comment on. 329, and you see it amongst the all-time higher stocks as well. 330 actually, 2.2% higher. Rajesh ji, what is the view on ONGC at current levels?
So very strong breakout on the stock. This is the third week where stock is making higher high-low formation on a weekly candle. So that clearly shows that if there is a sustained buying action, series on series, there is a long built-up, a very strong buying action is happening in this counter. I think ONGC can exhibit good amount of rally in near term also. Possible target we can see towards 345 to 350 also. So I think those who have already long in the stock can hold the position. At this juncture, we would advise to trail the stop loss towards 322 to hold the long position. As overall structure for ONGC is on the bullish side, though market is volatile and the market is trying to book some profit ahead of budget. But here in ONGC, there is a different kind of behavior we are seeing, and despite of volatile market, this stock is holding the ground at higher level. And the way after the opening stock is showing buying interest, we hold our bullish view. 322 is your stop loss. Possible target 345 to 350 in next couple of trading session.
Okay, I think it's getting a bit on the higher side. Now the Nifty is down 86 points, 24,523 for you. And it's the advanced decline picture that's deteriorated very, very sharply. At 9:32, we have 1,322 shares that have lost ground, compared with 864 which are in the green. All major indices are at day's low. We were tracking 19 for you, and at the moment all 19 of them are in the red. The selling or profit booking is led by defense counters, both in terms of percentage fall as well as in terms of volume. Hindustan Aeronautics is now down 5%. About 715 crores worth of shares have already been traded. Let me just share with you the advanced decline number in all the major indices. Let's start with the mid cap 100 index. Out of 100 shares, only 19 are in the green. The small cap index, only 18 shares are in the green out of 100, and both these indices are down 1% each. Let's look at the NSE 500, 0.5% lower. Just 120 out of 500 stocks are in the green. So you can see the extent of sell-off which seems to be accelerating. Nifty, out of 50 stocks, only 12 are in the green. That's the status as far as the first 15-17 minutes of trade are concerned. It's only the Nifty Energy Index which seems to be holding out, but only in that index you have one stock, which is ONGC, which is in the green. Sakshi.
Right, let's look at Aurobindo Pharma. The stock is in news now. The company's board has given a nod for a buyback of shares. This will be via the tender route, and the price has been decided at 1460 rupees per share. And you can see the stock down by about 1%. The company will be buying back about 51.4 lakh shares as well. So that's the news coming in from Oro Pharma. Rajesh ji, how are you looking at Oro Pharma? The stock had just showed some signs of momentum over the last week odd, and with this news now coming in, there could be some more pressure for investors to benefit from that higher price if they want to tender their shares in the buyback. How would you look at it?
So I think just because of buyback offer, there would be some hangover on the prices at this moment. I think some more consolidation we can see for some couple of week for the Arvindo Pharma. But the way stock managed to give breakout of its falling channel on a weekly chart, I think we believe that till stock is holding about 1320, 1330 mark, there is a high possibility that again going forward we can see a rally, and once stock again manages to cross about 1385 1390 zone, here is a possibility that we can see a higher target towards 1450 to 1500 also in coming months for Arvindo Pharma. So overall structure is bullish for the stock. Across all time frame, stock is showing strength. The stock is almost trading near to its all time high trajectory, though there was some profit taking from the recent high, but still looking at the near term short term chart, we still hold our bullish view, and we believe that till 1320 is intact. Trend may likely to remain on the bullish side, and one should use this decline as a buying opportunity. And yes, one can tender in buyback offer those who have already bought at lower price. I think this decline should be again used as a buying opportunity in the stock for positional perspective, and we believe that 1450 to 1500 would be the next target for the stock on a positional perspective.
Okay, got that. So that's Oro Pharma for you. We'll continue to watch out for any more details that come in on the buyback as well from the company. But it is the AB group that seems to be in action. Of course, Aditya Birla Money reacting to its numbers. Now it's Aditya Birla Fashion and Retail that's pulling up within the F&O space as well. Are you looking at this particular space and the stock, Rajesh ji? Entire textile space has been off and on in focus, especially stocks like Raymond that have been rallying on the back of their own news flow. But the entire space is also hoping for some news to come in the upcoming budget probably. And Aditya Birla Fashion Retail now 2.5% higher within the F&O space. Is this a move that you should be looking at?
So I think yes, Raymond is in clear uptrend. The way stock has moved up, I think here is a possibility that if something comes on the positive side for textile, there would be a rally. For Raymond, we believe that till stock is holding above 2180 mark, I think there is a possibility that this stock can exhibit good amount of rally towards 2400 also. So here we are holding our bullish view. Aditya Birla Fashion, ABFRL is also consolidating since last couple of days in a tight range. Almost stock is penetrating to its immediate breakout level of 330 kind of zone. That's the important level to watch for on the near term perspective. Once stock crosses about 330 332 mark, I think there would be a breakout play on a weekly as well as on the daily chart. And if that happens, then this rally can extend to 345 to 355 also. So here also one can buy and accumulate, but here we would advise to keep a strict stop loss of 317 to buy and accumulate the position in ABFRL. If something comes on a positive side for textile, then yes, there could be a breakout in this stock also. Then 355 would be the target for ABFRL also.
Sakshi, we have a very interesting move coming in on Asian Paints. Remember, the earnings were just disastrous, but there is a short covering that's happening from today's low, which was 2842. So far, we have 2914, which is a nice 70 point uptick from day's low, and the volumes itself are substantial. We have about 600 crores worth of transactions that have happened on Asian Paints. This is something that needs to be at least noticed. At the moment, we are just 20 minutes into trade, and already 1.3 times the 5-day average on Asian Paints has been traded. 20 lakh 42 shares, 20 lakh 42,000 shares as far as Asian Paints are concerned. Whether it's a buy or sell, it's only time will tell, but you need to notice the grip that the stock has at 1 monthly lows. Remember, the all-time high was 3,500. You have it around 2850 in early trades. What else is buzzing? Let's look at the FNO zone. Very smart move coming into L&T Mindtree, 3.3% higher. We've discussed both ONGC, Muthoot and Indus Stars. These are the other stocks that are in the green. At a record high is India Cement, 4.5% higher. This is a 17-year breakout that is happening. All possibilities, open interest, volume, all of them are buzzing in the green as far as India Cement is concerned. What else attracts my attention? I think it's Bajaj Auto. This is something that needs to be seen. A 3% downtick accompanied by a very sharp uptick in open interest. Rajesh ji, post earnings which were mildly disappointing, what are Bajaj Auto charts telling you?
I think Shalji, if we analyze the whole automobile space, that is under some profit taking from their recent rally. Most of the stocks are behaving in the same manner. So I think we have seen very strong rally in last couple of months, and some profit taking is happening at higher level. Though Bajaj Auto is reacting to the numbers, so I think as of now, the structure is still on the bullish side. Though stock is now trading near to its 50-day moving average, which is placed at around 93.50 kind of zone. So that level needs to watch closely in the near term trading perspective. 9350 would be your stop loss if you want to buy this decline. If it breaks below 9350, then yes, there could be furthermore, down tick we can see towards 9100, even 9000 zone also. So that would be the next level on the downside. But overall, long-term structure is bullish. So those who are waiting for dips to buy, they can wait because market is also volatile, and ahead of budget, some profit taking is happening. Most of the automobile stocks are behaving in a profit booking mode since last couple of weeks. So I think wait for some corrective move towards 9150 kind of zone where you can again deploy some long trade. Your stop loss in the decline should be around 8950. That level is important on the downside. So I think if you are buying around 9100, then keep 8950 would be your stop loss. On the higher side, if I look at the chart, 9680 or 9700 is the key resistance or supply zone at this moment. Once stock crosses upon 9700, then I think again resumption of uptrend would be there, and then possibly we can see a target beyond 10,000 also in the Bajaj Auto. So overall structure is bullish. Buy on dip should be your strategy. I think in near term you will get opportunity to buy and decline towards 9150 where you can deploy some long trades.
Okay, got that. Let's look at the defense space. There is a dip that you're seeing across the board. About 3.5 or 5% lower is how most of the stocks are now trading lower at. HAL is now down 5.5%, BL down 4%, BEML down 4%. You have Mazagon Dock that's down 4% as well, Cochin, GRSE. The entire space seems to be seeing some dips that are coming in. Rajesh ji, how would you look at this dip? Will this dip be bought, or should one still stay away as perhaps after a long haul this could be the beginning of some more deeper correction perhaps?
So after the strong rally, most of the defense stocks are showing profit booking. I think let the supply pressure to settle down at a certain level, because still we are seeing that profit taking is still going on in these stocks. So for Garden Rich, if anybody wants to buy this stock in decline, so I think I would advise 2350 would be the attractive level in the downside to deploy some long trade with stop loss of 20 to 80. That would be the level where I would be focusing on to deploy some long trade. if I want to buy HL, then now stock is almost trading near to its 50-day moving average. Already stock slipped below to 20-day moving average. So for HL, 49.80, 49.50, almost from 1 to 2% decline from the current level would be again attractive level to deploy some long trade. But in this decline, I think one should follow the strict stop loss, because now we are ahead of the important event of union budget. So 47.50 would be your stop loss to deploy some long trade in HL, because I think these kind of stocks you should try to take some contra trade, because we are seeing that the strong uptrend is going on in all this stock, and very few days where we get the opportunity to deploy some long trade in these kind of stock, because when we try to chase on a upward move, then it's very late, and then risk to reward is not in your favor. So I think this decline should be used as a buying opportunity, as long-term trend is intact. A long-term focus for this sector is also intact by the government. So I think we may see continuity of uptrend. Maybe some decline of another 1 to 2% in this stock can be used as a buying opportunity. But yes, follow the stop losses also. 47.50 would be your stop loss to deploy a long trade in HL.
Okay, so that's the view coming in on the entire defense pack. Well, now more sectors are pulling up from the low point, and some buying happening at that dip. So private banks are now in the green. You did have Axis Bank earlier that was up. Now even Federal Bank, ICICI, IndusInd Bank, they are pulling up in trade. From the oil and gas, you have ONGC, that's the one that's performing. And apart from that, even the OMCs, they are ticking higher. The gas names Mahanagar Gas, Gujarat Gas, Indraprastha Gas, these are the ones that are also over 1% each in trade. And apart from this, even in the FMCG basket, you have more names that are pulling up. Marico is up by about 1.5%. I think this is at a fresh record high also for Marico that we are looking at. Apart from this, Dabur, Tata Consumer Products, Balrampur Chini, Britannia is also pulling up in trade. So some more buying action happening across the board. FMCG space for you, Rajesh ji, Marico at fresh record highs. How would you look at it? And the entire basket, where are you looking at for opportunities?
So I think yes, in the beginning of show also I mentioned that FMCG is the space where we can see continuity of trend. Marico is our preferred choice at this moment. The way stock is moving in uptrend, a very strong breakout of long consolidation on a monthly as well as on the weekly chart. The way stock has managed to give breakout on a monthly chart, here is a potential to go beyond 700 mark also in the near term. So I think 720, 730 would be the next target for Marico at this juncture. One can deploy some long trade at the current level also. Your stop loss should be placed at around 668. Another stock that we like from the same space is, Dabur is also looking promising. Here also we are holding a bullish view. Dabur also managed to give breakout of its long consolidation. So here is also there is a possibility that we can see target towards 670 to 680. So Dabur is also looking promising. I think one can deploy some long trade here also with stop loss of 635.
9:47, ladies and gentlemen. In just half an hour, it seems that the bears have lost the plot. The low on the Nifty was 24,515, and from then on we've moved about 90 points towards positivity. In less than a second, less than a minute or so, you will see Nifty back in the green. 24,600 is back with the bulls. The last 10 minutes have been very beneficial as far as the bulls are concerned, and let us now see how it goes forward. So the correction lasted exactly half an hour, and the low was, I'll tell you the point difference. So 1600 to 24,600 to a low of 24,550. Now this dip needs to be looked into Remember, uh, today is the weekly expiry of the Nifty, and therefore you see these very sharp volatile moves. I'll just point out the stocks that have helped the Nifty move from intraday lows to all the way up. It's ONGC, 330.65, 2.5% higher, record high. Axis, ICICI Bank, and SBI are helping the Nifty on its way up. Remember, the losses and the gains are so low that these are the stocks that are helping the Nifty on the long side. Needless to say, TCS 4190. What's pulling the Nifty lower? Bajaj Auto, Asian Paints, L&T, Tata Motors, and Reliance. And even in these, they have recovered very sharply from their day's low. Indus Stars taking it away, 418, 2.8% higher. LIC 1128 in the green, and very smart gains coming in. Sakshi, what are you watching? Okay, let's get Rajesh into the conversation on Indus Stars. Rajesh, what are the charts telling you? A very strong block deal that happened exactly a month ago has added fresh momentum into the counter. The all-time high on this one is still quite a distance away, but this is a move that has started from 120 rupees in April 2023 to 418 rupees. What are the medium-term charts telling you?
I think Shelji, one should hold on the position. Very strong breakout in the Indus Tower, and sector tailwind is also supportive. So I think Indus Tower may continue furthermore upside. The way stock managed to give breakout on the long-term chart, I think there is a high possibility that this stock can continue towards 450, 460 zone also in a short-term basis. So I think one can hold the position with the stop loss of 405, and I think there is a high possibility in near term, short term, we can see a higher target for 440 to 450 kind of zone, where they can again review the position, because overall sector is in a bullish trajectory, and we believe that further more continuity would be there in telecom space going forward. So and as the market is also bullish, and the clear winning sector in on the telecom is a clear winning sector and showing a strength. So we believe that one should hold the position.
Fair point. And as I had mentioned, the Nifty is back in the green, ladies and gentlemen, now 33 points higher, on its way towards 24,700, where you have a very strong resistance. Remember, it's the weekly expiry of the index. Therefore, there is an added dose of volatility as far as prices is concerned. But look at how smartly it's ICICI Bank that is driving the Nifty on its way up. Needless to say, a record high. Rajesh ji, my favorite question to you. You can't comment on Axis Bank, but you can definitely comment on ICICI Bank. Now tell us, what is ICICI Bank's future looking to you as far as medium term charts are concerned?
So I'll comment on ICICI Bank as well as SBI also. So these two stocks is looking bullish on the from the banking pack. One is from the private bank, that is ICICI Bank. Very strong buying action is happening in this stock, and I think this stock can take Bank Nifty further higher. The way Bank Nifty has recovered from its intraday low of 52,170 kind of mark, and now we have already gained 300, 350 point in Bank Nifty in last couple of minutes. So I think the way Bank Nifty has shown today the strength, I think there is a high possibility that Bank Nifty may manage to give breakout of its congestion zone of 52,650 level. So once we able to take out 52,650 level, then here we may see a triggering of short covering action, and then possible rally can extend. So ICICI Bank, SBI, these two banks are on the leadership position at this moment. So ICICI Bank, we are projecting target towards 1270 to 1280. Keep your stop loss of around 1220 to buy and hold the position in ICICI Bank. And from the PSU Bank, SBI is also now, taken the charge, and the way SBI has moved up above 880 mark, I think there is a high possibility that, towards the budget, we may see again, new all-time high trajectory for SBI. So this stock is also ready to, register new all-time high very soon. So we are bullish for SBI also with stop loss of 870. upward target we are expecting towards 920 to 940 on a short-term basis for SBI.
Okay, let me just make a very observation on the FNO charts. I'll show you the 24,650 Nifty call that is now trading at 59 rupees 60 paisa. This was something which was moving fairly rapidly, and we'll just try and show you the charts of this one. The day's low was 44 rupees and it is now at 78. Very smart move coming into the pricing. So far 24,650 is where the index is recovering about 150 130 points from day's low, and the advanced decline is also has improved dramatically. It was 1650 stocks in the red versus just 600 in the green at about 941 942, and at the moment you just have 1450 stocks in the red, about 800 stocks in the green. So it's improving and it's getting better and better. Rajesh ji, what catches your fancy? What looks good?
So I think Shailji, the focus area would be on FMCG, and then second now would be on the banking side. And the banking we have already discussed ICICI Bank and SBI. So I think from FMCG, Colgate Palmolive is also looking promising. That stock can also move higher to 3200 to 3250 also. Very strong buying action is happening in this stock. So that stock one should keep eye to deploy some long trade in this stock. And I think Shailji, one more space where we are focusing, that is insurance space. And from that space, I would recommend here LIC, Life Insurance Corporation. Stock is trading at around 1127. Here is a clear breakout has been taken place, and I think this stock is again ready to register new all-time high trajectory very soon. Possible target for LIC we can see towards 1200 to 1240 in the continuation of this up move. The way stock has moved up in last couple of weeks, I think there is a high possibility that 1200 level can be crossed by the stock in this rally. I think one can deploy some long trade here with stop loss of 1090. And another space that we have already discussed, that is tire space for budget. I think some of the stocks are looking very promising. Apollo Tire we have already discussed. I think C8 is also showing good buying interest, and here is also we can see some rally. Possible target for C8 we can see towards 2950 to 3000 mark. I think another like lot many stocks are there in tire space where one can deploy. So Apollo Tire, C8 Tire, JK Tire, all these stocks are looking promising to deploy some long trade for trading perspective.
Fair point. We'll also point out the FMCG index to you, ladies and gentlemen. This is at a record high, and while all our attention and focus has been on railways, defense, banking PSUs and so on and so forth, here is an index which has risen to a record high for the 10th day in a row. The rally is on its 10th day, 60,828 for you, ladies and gentlemen. We generally look at the fact that valuations in the FMCG sector haven't corrected, or time correction has only taken place. But look at stocks like ITC moving from 418, 419, 415 rupee levels to 467. Look at Hindustan Unilever moving from 2300 to 2700. Look at Colgate Palmolive, record high. Look at so many other stocks within this space that are doing pretty well. But at the moment, the valuations are now again moving towards a lot of strength. This is a space that I wanted to mark because it's generally ignored with the broader market, and it is now doing extremely well. Just let me mention the all-time highs in the FMCG sector. Marico 2% higher, 679. Britannia 0.5% higher, 58.90. Imami 808, 4.5% higher, and of course L&T Foods 0.5% higher at 293. Rajeshji, before we let you go, the national budget is probably the last main event that we are looking forward to as far as bulls are concerned, and then we will get into the election season with your state Maharashtra coming into the focus. Anything that you would like to comment on this rally that we have seen based on your experience and based on your understanding of the longer term charts as far as the indices are concerned? How do you feel? Is it a bit giddy, a bit edgy, or is everything looking fine to you?
So I think I'll define in a two perspective from trader as well as for the investor. So for trader, this really should be used as a buy, should be used as a profit booking opportunity, as we are moving towards the budget, and a lot of expectation is already built in the prices of the stocks, where the major focus or major roadmap is already defined by the government in last couple of weeks or month. So I think that is already priced in the stocks. Already result season is going on. A lot of expectation towards the earning is already priced in the stock prices. So maybe possibly we can see really further extension of really towards the budget. Maybe we can see a target towards 24,800 to 25,000 also. There is no surprise if we hit the 25,000 level also on the budget day, or prior to budget day, or post budget action. I think that would be the level where trader should be looking for booking some profit around those level, because already release already stretched, and most of the underperforming sectors are also participated in these really, where still the street is not confident about the continuation of earning or growth trajectory compared to other sector. So I think those sectors have already participated, like we can see FMCG, chemical space, even IT, where a lot of many questions are there for IT stocks, and growth trajectory of IT companies. So I think these all sectors have already participated in this up move. So I think 25,000 is the area where we would try to book some profit for trading perspective. But for investing, I think if we get any knee-jerk reaction post budget, or if we get any kind of dip in the market towards 24,000 or 23,700 kind of zone, that would be again interesting and attractive level to deploy long trade in the market for short to medium term investment. We are bullish,
Right, sir.
and the way the flows are coming in the market, the money flow which is coming in the market through the mutual fund or through the direct equity investment, I think that will continue. And then possible target for Nifty on a long term perspective, or for December point of view, if I talk about for this calendar year, I think we can see target towards
Right, sir.
27,000 also for the Nifty.
क्या बात है, आपके मुंह में घी शक्कर राजेश जी. 27,000 on Nifty we await, and of course you will be with us on that day as well. Thank you so much for your time, ladies and gentlemen. This is where we wrap up the morning edition of our continued market coverage. Of course, news continues on Business Today television, and I'll be back along with Sakshi at 2:30 p.m. Stay glued to BTTV.
We're now joined by Mr. Mohandas Pai. So thank you so much for talking to India today. Sir, Karnataka government is now contemplating of bringing in reservations
It's a very regressive, illegal, unconstitutional step. And anybody who reads the bill will understand how bad it is, and they'll be shocked. For example, the bill says a local is defined as a person who is born in Karnataka, who has spent 15 years here, and who knows Kannada. And he has to pass a test. And if you don't have Kannada as a language in a school leaving certificate, then you have to take a test by a nodal agency.
Yeah.
Now, suppose I am looking for a job personally. I, of course, have Kannada. I studied Kannada, the third language. And I want a job, and I have not studied Kannada. And I'm not born here. I've lived here 25 years. I go for a job. I'm not eligible in the local quota. And why should they interfere? And then they say, for any enterprise which has more than 100 employees, a government official will sit on the recruitment committee. This is outrageous. Totally illegal. And the same government a few days back said we're going to have a policy for GCCs to improve employment. We want to go beyond Bangalore to other cities. We're going to incentivize them. They announced the big IT deal in November. And now they're coming with this. Who will come now? First of all, they spoiled Bangalore's reputation by not investing in Bangalore. We have a minister for Bangalore who's a very powerful person. But what has happened in the last 1.5 years? Have we seen an improvement in the lives of Bangalore? No. Traffic has gone from worse. Corruption has increased again. Corruption has become much, much more in this new government. Everybody went up BJP for some 40%, which is not true. Now corruption is much more. And now they want to have inspectors going to every place and finding out who is doing what. They want to have this local violent people who went and beat up people for Kannada signboards to go everywhere.
Yeah, they did.
I mean, what is happening to this state? Today, Karnataka has more jobs than people. Kannadigas. They must spend money on higher education. They must spend money on training people. They must spend more money on skill development. They're not doing all that. Instead of that, they will say, we'll pass a law and force you and will control you. Who will come? Karnataka is the richest state in India in per capita terms. Yeah. GDP is around 28 lakh crores. Instead of giving good education, they're doing all this. See, we lost the EV industry. Karnataka, first state to have the EV policy. We lost it because they didn't. I was speaking to one big EV company the other day in in Bombay, and that CFO told me that when they went to government, they didn't give them land, so they went to Tamil Nadu. This is how they treat them. This is the previous government, not this government. This government, the MB Patil is trying to do something more, which is very good. But instead of developing the state, they create unnecessary controversy and it will go to court and the court will give a stay because it's unconstitutional. Haryana's whole thing has gone to